So do you need a lot of money to start a high cash value life insurance policy? Well, the short answer is no, you don't. It all has to do with the ratios. How much do I want to pay into a policy? How much do I want the ability to pay into a policy on any given year? But we're going to go into some detail here. We're going to look at several examples. So we'll have a number of videos that will follow this one. But to kind of set the stage as far as what we are going to go through, because we do get questions on this quite a bit. Do I have to have a lot of money, or what's the ideal amount of money? Because regardless of what one's situation is, right? Whether someone's paying in $200 per month or $200,000 per year, is if we construct a policy for maximum cash value, flexibility, if we have the need or want for a certain death benefit, we see how we can accomplish that as well. Regardless of what the numbers are, it can all be customized to fit my personal situation. So, for example, we're going to look at these three examples, beginning with a 25-year-old looking at $200 per month up until he's age 65 for 40 years. And the question we're really going to consider, and this is going to be consistent with each of the series, each of the videos, is if I'm paying in $200 per month, do I maximize that $200 from day one? Meaning, do I squeeze a policy? Do I squeeze the premium as low as possible? Do I set the MEC limit at close to $2,400 per year, a little bit overinflated? Do I optimize it for maximum cash value? Or do I construct it with a higher death benefit? Maybe I want a higher death benefit. I have a need for more life insurance. Perhaps I want the ability to add more money down the road, right? So for example, I might want to start with $200 per month, but if things go well, I might want to add up to $5,000 per year, perhaps $10,000. So that's the kind of things we like to go over, and we're going to show in all these case studies, right? What I want to know, whether I'm 25, 35, or 50, is if I'm paying in, take our 35-year-old for example, if I'm paying in $5,000 per year for 20 years, first, what's it look like when I maximize a policy? I optimize every penny of that $5,000. That's option one. Then option two would be, what's it look like if I build in, say, a $2,000 base premium and a $20,000 MEC limit? So now I have the ability to add another $15,000 per year on top of the $5K I'm presently paying. What are the pros and cons to that? Because if I build in that extra room, how do I raise the MEC limit? It has a direct relationship to my age and death benefit. So if I raise the death benefit, is that just something I can do for free? No, there is an added cost there. There's a cost of insurance. So really what I like to look at is, hey, if I'm going to pay $5,000 per year into a policy, if I look at this example, what's it look like if I maximize it compared to building in more window room? How much more or less cash value do I have in one of those scenarios? Compare and contrast so I can see the actual dollar amount that it costs me, rather than just say it's a good idea or we should do it this way. No, I like to see it up front. Who doesn't? I mean, this is our money we're paying into a policy. So in this case study, I should say these case studies, we're going to look at what we just mentioned, $200 per month for a 25-year-old, max funding the policy from the start, then building in window room to add more. We're going to have about a $5K limit in the example when we build in more space. Actually, it's a $10K limit. Over here, what we just mentioned, $5K per year, maximize the policy, and then build in a $20K MEC limit. And then over here, age 50, $10K going in for 10 years, max fund it from the beginning, optimize the $10,000, and then build in room to pay up to $25,000 per year. That's the main thing, right? Because we always hear, hey, should I maximize my policy, and if I have more money, I can just open up a new policy down the road? You could absolutely do that. But what we like to consider is, hey, what does it look like if I max up my policy now, open up a new one down the road, or fund a policy now, build in a little bit of extra window room so I can throw more money into it down the road once I'm over the initial insurance expenses. And there's no right or wrong answer. I mean, I'll tell you, the individuals we work with, some have 10 plus policies, some have 1 or 2 policies. It's all relative to what we are trying to accomplish. But what I will say is that we always like to show the options, because the last thing that you or I or anyone wants is to be presented a policy, it looks good, I buy it, but then find out after the fact that I could have got a better deal somewhere else. However it is, so cash value life insurance policies, I'm buying a new laptop, a phone, whatever it might be, the transparency, I've got to be upfront with everything. This way I can make the best decision from the get-go. So to our original question, do I need a lot of money to open up a policy? No, not at all. We're going to look at different options here. Hope you enjoy, and as always, reach out with any questions. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.